Hi, welcome to the weekly wrap-up Bulletins for January 8th, 2023. I'm Bruce Burke. I'm here with my good friend and co-host, Ted Huff of Fintech Confidential. Our sponsor this week is CoreX Legal, your Web3, crypto, and blockchain legal team. Now I'm going to send it over to Ted so he can share with everyone our topics for this week.
Bruce, thank you so much. This week, we're going to talk about how Polygon paid Utes developer $3 million to migrate from Solana. We're also going to hit on Coinbase and their $50 million fine for significant compliance failures. Then we'll go over to Celsius founder Alex Mashinsky. Wow, I can't even say that today. And how he got sued by the New York Attorney General. And then we'll talk about real-time payments and how they're expected to exceed $86 billion by 2028. And last but not least, please hang around. We're going to be talking about how Chinese billionaire Jack Ma loses control of the fintech giant Ant Group. Bruce, we have so much stuff. These are really, really great topics. This week has not been any sort of, we got back into the first week of January of 2023. And the stories have just been flying off. I mean, I've probably been looking at close to 1,000 articles every day. And man, there's no shortage of news right now. But I mean, we should probably talk about how Polygon paid Utes $3 million to migrate from Solana. And, you brought up a good point earlier as we were talking pre-show about why this is actually big news. Because, most people are like, okay, cool, they paid them, but why is it such big news?
Well, the big news in my mind is previously they said that they hadn't received any payment to migrate, but then they tried to also at the same time, the Solana blockchain that they're on, they asked Solana for $5 million to stay, pretty much. So it was... I won't go as far as saying extortion, but
negotiation.
It's different. It's different.
It's a bit of negotiation. I mean, it's no big deal. One of the things that was really, as I was looking at it, I'm going to go ahead and share this for everybody that's watching. If you're not watching and you're just listening, hey, don't worry about it. You can always go take a look of what we've got going on here. And of course, I'm struggling to get to the share, right? So I'm pulling it up right here. Something that
really stands out to me because of this is there's obviously a desperation or a real need for good quality projects that are putting out something. And this, if they're willing to go and pay, right? And it's just like Microsoft when they launched like Windows Phone, right? They're like, yeah, come on, devs, come in here. There's a real need for good, solid projects in Web3 right now. People need to pay attention to this.
Well, and that's a good point. We see all of these projects. I mean, it was a really explosion of projects. Most of them were horribly run, if run at all. And not only that, but they didn't provide any sort of value. So you have all of these, and then out of that hubbub around that and everything kind of getting crazy, you start to see some of these really start to show up that actually come to the top. And just like anything, when you've got something that's working and something's providing value, the people that the networks and the supporting architectures and all those different things are going to fight over that and try and get it onto their system. So it really doesn't surprise me that they were paid. I think the other piece is that these are all like, they're just going back and forth, and it's going to be really interesting. And honestly, I'm with Solana being in as much trouble that they are after the FTX thing. Polygon is like really becoming the winner out of a lot of these things, which is a little scary because the idea of this whole thing is to decentralize everything. And now we're back to centralization, and we could talk about Binance because Binance is doing like 90% of the transactions in the crypto world now. And now we're back to centralization. And it just, for me, I like that there's some competition. I'm just worried that we're going to not have enough competition to really manage these things right.
Yeah, it's I know it's early days, and I know that there's a lot more to come. So that, like, to me, people are trying to become market leaders, or grab the biggest slice, or have the lion's share, whatever you want to say. But it seems like there's just a small faction that are really being successful with their projects. And is that because they have the secret sauce? Is that because they have the money? Is that because they've got like a producer's ear for the right music? You know what I mean? Why, are these few companies, so successful in Web3, where everybody else is either a rug pull, or they just, can't stay afloat, so that's a real question. And looking at these companies and looking at how they're run, I tend to think that Polygon kind of gets what it deserves. They're doing a lot of work to bring people along and bring people with it. So I think they deserve some of the success that they're making. But there's other ones that have seen a lot of even more success that don't deserve, an inkling of thanks, because they haven't done anything other than fill their own pockets, Yeah,
and I think you just hit on the key thing, is those who are trying to fill their own pockets and trying to figure out how to game the system versus provide things that customers and consumers see as value. They're the ones that are struggling. They're the ones that are falling down. They're the ones that are causing, a lot of heartache. But the ones that are not doing that are truly trying to use the distributed networks and the blockchain to move things forward, whether it be for art, or whether like art, like Zola is like really into the gaming side of the house, and they launched X.LA for all of the art side of the house. But they're trying to serve a community. If you're not serving a community, you're not going to be successful. And no. I think that's one of the big things, that when you look at Utes and DeGods, they're serving a community. So that's my biggest piece in there. But that's also why value fluctuates, and you start to see these things getting traded, and that's why they end up on Coinbase. That's why they end up on Binance. That's why they end up in those places, or OpenSea, because they're serving a community that wants them. So that's just my perspective.
Obviously there's hype. There's hype behind everything, right? There's advertising, there's marketing, there's push, there's promotion. But what the uptake is of that hype, and what that uptake is of that promotion, and essentially, I'm going to go back to wrestling, right? Is it a good wrestler, or is it a bad wrestler, right? That's really what it is. It's the good guys versus the bad guys right now in the wild, wild west of Web3. It really is. It's exactly what it is. So it kind of has that same feel, of WWE, or, championship wrestling from Florida. I just wanted to throw that parallel in there, right? I'd like to, that's the way as Bruce sees it.
Well, the funny part is you're talking about wrestling. I think Coinbase, had a pile driver on them. They got hit with $50 million of a fine for significant compliance failures. Man, these compliance failures are just crazy. They're talking about human trafficking possibly in there. They're talking about all sorts of crazy stuff because they didn't go and do the research to do the KYC. They didn't do the anti-money laundering stuff behind the scenes, like the things that Fintech knows you need to do. They just weren't doing it, and they got caught.
And the funny or the worst thing is for them, they not only have to pay that fine and what is it, 50 million, but they also have to invest 50 million in buffering up their building up their compliance sector within their company.
Mm-hmm.
So actually, the fine is $100 million, right? and salaries for all those people beyond that, and the equipment and systems and all that's going to go beyond. So it's really like, if you really want to look at it, it's like a $200 million fine. Seriously.
Yeah. Once it's all done, once everything is done and they've got all the auditors signed off and everybody is happy, they're probably at $500 million.
Yes.
They're probably going to be at about $500 million, and I can only imagine, their legal fees. Like, this is not something that's small that you just get hit with, but it's been kind of crazy. But one of the things as we're talking about this, I want to give some context to how bad this is. I hit on a couple things, but they had a backlog. So you're supposed to review transactions for anti-money laundering, right? So, and what you do is you set some criteria. I mean, I've built a couple of systems that do these types of searches and put all the rules in place and use some fun machine learning. Let's throw a couple other buzzwords in there, maybe some AI. I don't know, whatever you want to call it.
There's some blockchain in there. There's got to be some blockchain to track immutable, right? You got to have the block in there.
But here's what ends up happening is that you hire people who aren't trained, who don't understand, that can't get through it, or you set the rules so strict that everything gets caught, so you cannot actually do it. And it looks like Coinbase has like a mixture of uneducated or not skilled people, and maybe that they overset some of their rules, and they ended up with well over 100,000 transactions and that popped monitoring alerts that specifically was exposing the potential criminal activity. And the reason why I bring up is that if you have 100,000 that you believe very, very highly that are criminal activity, and you're not able to get to them, that means you're spending all this time on these things like, changing of a bank account, or I traded one millionth of a coin, right? So you're looking at these things and you're like, well, this guy hasn't ran a transaction in forever. And so you're looking at that to see if there's something connected to that, versus looking at the ones that are a higher probability of getting you in trouble. And it's really just a volume game and really tweaking it down. And that's where when you start talking about them having to spend another $200,000+ on building out their compliance program. I've been in companies where you've had to do that. And so what's going to happen is it's going to be crazy, because they're going to just like go crazy and revamp everything. They're going to have all new rules. They're going to bring in all new technology. And the funny part is they're probably not going to spend a whole lot of money on training.
No. So, and this is just a continuation of the story where the SEC and, all the other regulatory bodies, they're not so much doing it from a regulatory. They're like, the rules are there. We don't need to write any new rules for crypto. It falls under finance. It falls under this. It falls under that. They're now just like going after everybody and just like, no, we're just going to penalize you. We're just going to penalize you. We're just going to penalize you. Going after the money, right? And they're like, I guess it's like, how do you really stop somebody when they're doing this stuff, right? I mean, you can't have a SEC representative sit in their office all day, every day. So it's all the stuff is happening post, indiscretion, you know what I mean?
Yeah. Well, and I mean, a lot of it really comes down to is policy procedure, and really having good guidelines around that. And so, we've talked about this in past episodes, is really, if you use the same regulatory framework as what a financial institution would need for a depository account. If you're lending, if you use the same criteria that a financial institution would use for lending, you'll be good. If you are following the same criteria as selling a security as as everybody else is doing. If you put those three things together and you follow the guidelines that are there, the likelihood of you getting in trouble is really, really low. That's not saying it won't happen, but that's why I think, we've talked about in past, and I even talked to the Cardano chief legal officer about this. And his point is we haven't defined what it is. Like, we haven't defined what crypto is, right? Is it a security? Is it a commodity? Is it a financial tool? Is it a currency? What is it? And so
I think it depends on what you do with it is
exactly
really what it comes down to. How are you implementing it, and how are you utilizing it, and how are you using it as a financial tool? Right? Is it
yes.
is it a security and something you're going to sit on? Is it a rapid transaction? A buyer and a seller, right?
Mm-hmm.
Is it a long-term investment scheme that staking and that kind of stuff, right? Where you're essentially putting your money in and then just leaving it there, right? There's a lot of different things you can do with money, right?
Mm-hmm.
And so there's just as many things as you can do with crypto, and so. I think what they're saying is if you did it with money, you would be in the wrong. So if you're doing it with crypto, you're going to
be in the wrong. Yeah,
I
fully agree. And I guess where I was going with the description of they haven't defined what it is isn't meaning that it can only be one thing. But what they haven't defined is that if you use crypto like this, it falls into this category. If you use crypto like this, it falls into this category. They haven't come out with the framework yet. And I know there are a lot of bills and there are a lot of regulations that are in process right now to really do that. And I've said this before. I think the FTX fiasco, which is ongoing and we're only going to learn more, really was that point where everybody goes, okay, we've got to make some definitions. We've got to put some guardrails up. We have to make this happen. And I don't think that the community around blockchain and around crypto is really like, oh man, like mom and dad just got us in trouble. We're in trouble. We're grounded. I think a lot of them are really embracing that by saying, hey, if we have rules, we'll follow them because that will make us all more successful.
Yeah, but in any money, in any financial product, in any industry, right, there's always going to be, those, right, that don't want to follow it, don't want to do it correctly. And that's not only true in crypto, that's true in fiat currency every day of the week, right? I mean, there's fraud every day in every which way, right? So it's not exclusive to crypto. What I think it is the reason that there's so much of it is because it happened so quickly and it grew so quickly that it kind of caught people off guard. It kind of caught the regulators off guard. It caught the banks off guard. And the bigger underlying thing in all that is the only reason people are so interested in it is they're kind of disappointed with our current financial system.
Yeah.
It's not doing enough. Money doesn't do enough. It's not interesting enough. It's not. It's not picturesque. It doesn't have a bored ape attached to it, right? It doesn't have a T-shirt,
Yeah, but this is one of the things that when I was at the MX Summit last year in Snowbird, Utah, sitting down with their CEO and talking about that, one of the big things is that the current ecosystem and the current infrastructure doesn't allow people to receive money, to use their money, to multiply their money. No, it's not meant to be easy to use. And it even causes people, whether you have a high net worth or a low net worth or negative net worth in some cases, you've got all of these different things. Just because you have money doesn't mean that it's easy for you to manage all of the systems that are out there. And a lot of people think like the more money you have, the easier it is. Actually, it's just
a lot
as hard.
More complicated. It's a lot more complicated. A lot more.
Well,
money brings so much responsibility. Just the security of it. Securing it and securing yourself. So if you're financially well, right? if you're a very well-to-do person, you've got to have security with you 24 hours a day, 7 days a week, right? So it's money is
interesting.
Very interesting. It's the most interesting thing in the world. People will do almost anything to get it.
Yeah,
anything to get it.
Yeah, they'll break.
It's really
all
just a
sorts of
worthless
laws.
piece of paper with stuff printed on it. I mean, when you come right down to it, it's a promissory note, a promise to pay.
Yeah. Well, and I mean, people will break all sorts of laws and do all sorts of crazy things around that. And honestly, that's what makes me so excited about this week's sponsor, CoreX.
Oh yeah,
man. I
love
these
this
guys.
guy. I love this guy. I love this company. CoreX Legal, ladies and gentlemen, CoreXLegal.com. That's CoreXLegal. Your blockchain, Web3, cryptocurrency, starting a new corporation. You're a startup. You are doing name research. You have intellectual property. They deal with everything. They routinely counsel their clients in legal areas arising in technology, context, internet, Web3, crypto, blockchain, data privacy, video games, sweepstakes, virtual reality, and social media. And they do all the other regulatory compliance stuff. They work with FinCEN, SEC, FINRA, all those guys, the whole alphabet soup of regulatory compliance.
Yeah.
They, like I said, litigation, technology transactions, you're getting acquired, you're licensing your IP, you're protecting your IP, or maybe you just need some legal strategy on, how to best arrange your company or how to bring your employees into being a part of that success, right? And giving them the tools that they need, and the protection they need, the legal protection, CoreX Legal is our sponsor, a great firm established by some fantastic people. They're headquartered right here in Tampa, but they do have a office in San Francisco also. It's CoreXLegal.com. They're on both West Coast. They're in Tampa, Florida, and San Francisco, California. And the team behind there is great. They sponsored the startup bus coming out of Tampa. You'll see at the bottom there, organizations we have sponsored. 1 million cups they sponsored, and now they're sponsoring the Bullet Point Bulletins and Fintech Confidential here, and just a great people, Brent, Britton, and Jeff. I'm probably going to massacre his last name, so I'm not going to try. Just some great people. I met almost the entire staff at the startup bus send-off party. Just a great group of people, and just a great group to work with, and we really appreciate their sponsorship and their support for Bullet Point Bulletins. They're our sponsor all this week. You'll see their advertisement throughout the week on all the episodes forthcoming.
Yeah, so one guy that probably could have used their help was the Celsius founder, Alex Mashinsky. I got it right there.
Yes,
sued, and he was sued by New York County Attorney General. And really around this is misrepresenting the financial condition of the company and really causing investors to have some major losses. But, there may be a few other things that Bruce, maybe you picked up, but this is like Celsius wasn't small. I mean, they had 600,000 accounts. Market value of $4.2 billion as of the 10th of July last year. I mean, these guys seem to be going the right direction. What went wrong?
Banks aren't your friends. That was Alex's T-shirt. I think it was Web Summit or something. He had a T-shirt that he wore on stage, and he's like, banks aren't your friends. He didn't ever say we're your friend, but he just said banks aren't your friend. And I mean, it's really no different, really, as far as like what they did than FTX did. And as far as like the charges that they're putting on them, you could really charge almost any company about, our financial condition, our sales, our stock, our shipments, that kind of stuff. Everything is hype. Everybody is around hype, but they just out and out, just like fabricated. And again, I'm going to go back to Ted. There was $1 billion in the center, and everybody had their hand on that $1 billion, right? And claimed it as their own. So, there's 300 hands on it. So there's $300 billion in the crypto industry, right? There's so much collapse going on behind FTX and Sol and this one and that one. Global Diversified, they're struggling.
And you got Gemini with their stuff.
Three Arrows. I mean, it just the list is significant. It's not one or two or three things. It's significant, and FTX kind of was like the straw that broke the camel's back. It seems like, you know what I mean? It was the one that like started like, the earth coming in on itself, right? The implosion or whatever you want to call it. It was just horrible.
Well, it started the lava flow, right?
A real lava flow. Yeah, that's a good way to say it. It was a volcano that, overflowed, and, seeing how they're in the Bahamas, and all that,
Oh, my goodness.
All I got to say is the Attorney General of the Southern District of New York, that is a busy office, man. They are the ones that are just suing the pants off of everybody. That's a busy office there. That's the big one, I guess, for financial crimes. I don't know.
Well, I mean, you have to think
that one specifically.
Well, you have to think. I mean, New York has been looked at as the financial capital of the Western world, really. I mean, other than London, I mean, really, New York falls into there, and then you go Shanghai, and then like it depends. Like,
and then you go to Ant Financial, right?
In China. Yeah. We'll get to that later, man. We'll get to that later. But yeah, I mean,
no, seriously, I think that Alex, in watching the post, right? I didn't watch a whole lot of it when it was on the rise, right? When crypto was on the rise, I wasn't watching Alex speaking at the different conferences, and I wasn't paying attention to, all these different things, but in watching their stuff on stage post, these collapses and everything, I sit there and I look at these guys that were doing the pitches and the stuff they were saying and everything. And I was like, how did anybody fall for this stuff? Because it was so transparent.
Well, but I mean, you have to look at it. Is it any time things are going well?
Yeah.
You look at, well, your bias really starts to kick in, right? So if everything in that market's going well, and they're all saying the same thing, and they're all just giving their little bit of flavor, you're like, well, you have your groupthink that starts to kick in. And so everybody that participates in that groupthink starts to go, okay, cool.
Yeah.
Me too. I got it. And until something happens, like an FTX, it does.
Lemmings to the sea, lemmings to the cliff, right?
But at the same time, now we have the opposite effect. Now, if FTX, there's so many people are like, oh, crypto's so bad. Crypto's not going to, it's junk. It's just made up. I'm like, hell, fiat's made up. or like money is made up.
It started with puka shells, right? Or I mean,
it depends.
Value is value. It's whatever the person that sees it and desires it, is willing to put on it, right? I mean, that's, all money is so, and all money is a belief system.
So that is a book that I've wanted to write forever, is to go region by region of the world and dive into the history of money in each one of those regions and find out what was the first value, what was the first thing that was used as a monetary value, and how did it transform into crypto today? I've wanted to do that for so long.
Cowrie shells is what I came to understand was the first financial.
And I'm going off on a tangent, and we'll circle back around because this is super important.
Yes.
Because our next topic really ties into this, but each region is different. Because if you were in a region where there was lots of grain, they used grain for that, right? If it was a region that was on the ocean, they used shells or they used things like that. If it was in the mountains, they used seeds and other things. And like all over the world, it was different. It was different. Some places used
the
rocks.
Plenitude of local resource or the scarcity of, right?
Exactly.
It could go either way, right? And it seems like scarcity is the thing now. The FOMO and the FUD seems to be the current way to get people to buy in, right? More so than once you get in, there's going to be a lot, but there's very few spaces to get in.
Yeah.
Seems to be the pitch. You know what I mean?
You have the
you're
exclusive
one of those insiders, you're going to profit.
Well, so what it's done is that the item is no longer the scarcity piece. It is the exclusivity of being in that community. And I keep coming back to this. That is the whole thing about Web3, metaverse, blockchain, crypto. There was an article written about this. Is like, are we using Web3 as just kind of a catch-all for everything? And we can talk about that at a later date, but I thought that was very interesting. But the reason why I bring up the history of money is because, one of our stories is that real-time payment, and I'm going to pull up this article, real-time payment.
Yeah, there's a lot of statistics around this that need to be examined.
Well, I agree. I'm not going to disagree with that one. But, they're looking at it being a multi-billion-dollar industry. And, I can't say that I disagree. And here's the main reason why. One of the key things with crypto was the real-time aspect of it. And so you saw how that grew.
Oh,
and I see this as kind of being a somewhat, they started being built about the same time, we've talked about real-time payments.
Real-time payments and crypto did kind of start moving together in correlation and coming out at the same time. Absolutely.
Yeah. So, as you can see here, I pulled up.
What a gain.
Yeah.
I'd like to have that gain.
Really? So, and the thing is that when I was at Money 2020 earlier this year, I sat down of the head of FedNow, that FedNow program. And, we're talking about these numbers here as well. And you really look at it and he starts to lay out the reasons why these numbers. He didn't use this exact number. I'm not going to put words in his mouth, but he's saying it's going to be tens of billions of dollars of a gained transactional volume in this. And they weren't even thinking about the inflation piece of it in this.
No, this is just based on turnover,
right?
And it's going. It's not so much that it's going to slow down. Go back up to the top there. I wanted to catch something out of the thing there.
I was dropping down to the report scope that actually knocks the numbers out.
Okay,
side by side.
No, but the fact that it's only 12.85 billion in 2021, and it's going to 86 billion by 2028. That's not that long from now, folks. That's 5 years.
That's a CAGR
Look
of
at that 32%.
Increase.
That's an insane increase.
Well, anyway. And if you look at this here, this is where I was going right here, right? The market size
right
value
there,
today. Yeah. Yep. In a little bit easier readable format, but this kind of gives you.
Leave it to me. Onward.
But it's all right. But they really are thinking that the COVID really started to kick this off, which I can totally agree with them, because we've started to get into an economy where getting people paid quicker and quicker and quicker. Like there are, and I know some investors in a company called Daily Pay that gets people paid every single day. So when they end their shift, they get paid.
That's coming to be more common. It's more desired than it was I think because the availability, again, scroll back down. I want to focus on one thing here. Back to where you were. Okay. One thing they cite coming right off the numbers here, right? The difference between physical and digital commerce, in other words, physical and virtual, right, is dissolving. And it's really dissolving more than ever. It really is. It's almost to the point where you can't tell.
Well, and I mean, a lot of it really came into the gaining popularity of contactless payments and how it's really just starting to be built into everything that we do. And then on top of that, you're going to see more and more mergers and acquisitions around companies that are in the real-time market. And then what they're going to do is they're going to say, all right, well, I'm doing traditional today, but I need to get it to real time. So I'm going to buy this company over here, and now I have real time. So you're going to see a lot of M&A happen in this space in order for people to keep up with everything. And
as our show last week with MasterCard, or what was it? Who acquired the Greek company? J.P. Morgan acquired the wallet. Exactly, the wallet. Yeah, that was clearly around their technology and their distribution, or their footprint. Let's say they're like in 13 or 20 countries or something like that. But they have all these physical to virtual tools. The transitionatory tools, I guess, is the way to say it. And I think you're, like you said, you're going to see a lot of M&A around that. And by the way, if you need M&A advice, CoreXLegal.com again. That's also something Brent specializes in. So just throw another plug in for the sponsor.
Our sponsor for this week definitely does do that. And just to be super clear on a lot of these things that we're talking about, we do not offer this as legal advice, nor do we offer it as financial advice. This is purely for education and for entertainment purposes.
Yes. We are not offering financial advice, and we're not doing CryptoZoo or anything like that. Okay, moving on. but
one of the things, and I did read the full report on this. One of the key things that I pulled out of it is they're really getting poised to use existing infrastructures and enhance them. So using payment gateways that are out there today, using existing technology that are out there today, and really merging these things together. And the goal is to just speed up the back end side of it. And I would not be surprised if we see the use of blockchain to do that.
No, absolutely not.
They don't mention it. They don't mention it in the report, but in my mind, I like that. That could be really good, especially, I mean, if you look at the Lightning Network, just to be as an example, if you're using the Lightning Network, it is seconds. It is super fast. It's almost as fast as a credit card transaction. So you're not waiting minutes, hours, days. You're boom, it's happening. So I can see this thing really starting to pick up.
They just need to make it friendlier. It needs to be friendlier.
Yeah. And as we've seen some of the acquisitions that have happened over the last few months, if you look at the approach that people are taking, MetaMask has made it relatively simple, but there's still some tweaks that have to happen in there. And we talked about this the last episode, is the company that can make it just as easy as using a credit card, just as easy as using Venmo, just as easy as using PayPal, just as easy as you name the tool that is quick.
Putting your Apple Watch to a terminal, just as easy as putting your Apple Watch to a terminal and, walking
when you
away,
get to that point, it's going to work. I mean, heck, one article that we didn't bring up, but, if you look at Australia, they're now the top crypto ATM country in the world. And
how did that happen?
Really what it comes down to is that A lot of other countries came down at the same time that Australia was coming up. But the big piece around that, Bruce, is the fact that the companies that have gone to Australia for that took the same approach that you're talking about. How can I make it easier? How can I make this seamless? How can I make it the on-ramp to crypto from fiat and the off-ramp from crypto to fiat super simple for everybody? And they did that, and that's why it's been super successful there.
Oh, yeah. It's and the simpler they make it, like we were talking about Reddit, they were very, very successful with getting these people just the profile pictures, and most of it was giveaway, so there wasn't a financial transaction. But you got to believe if they've done it once and they're successful, and they're like, oh, I got this now, right? Now I can go buy one. Now I can start trading them. Now I can, right? You just got to give them the experience. They have to taste it.
And get them familiar with it
before they're a believer, right? And the simpler you can make it, the less friction that you can provide, and the speed of it are three things that it just has to be, and that's what's going to bring the uptake. It's just what's going to do it.
Yeah, well, I mean, one person that figured out that user experience.
Who's next? That would be Jack.
How did you know that's where I was going? One guy that really figured out how to do that user experience in China was good old Jack Ma. And it brought that guy up to like crazy status as a billionaire. I mean, so much so that he had to go into hiding after making a couple comments about the Chinese government. And now that he comes out of hiding, you'll notice that, I mean, he doesn't own 54% of the shares.
No, and it's less than 5%. I think he's coming away with, and he's going to fall down. Only going to hold 6.2% of the total voting rights. So that's no control at all of a company that you founded and grew into $1 billion organization. That's essentially what happened to Steve Jobs, but on obviously a much different landscape and a much different industry, but essentially built the company and, out the door, right?
Well, and he previously owned like 53.46. I know it says 54, so they rounded up, but 53.46. Oh, there we go.
It's more than half.
more than half. And so they also, the way that they updated all of the, and it doesn't go into details here. I did some additional research. But what some of the things that the board did is that they made it so that this is really interesting. And I've seen it done in the US a couple times, but they've made it so one person nor a group of people can take control of the company, of the primary decision making of the company.
Yeah.
So that's really interesting.
So but Jack Ma is a visionary. Jack Ma had a vision unlike many other people. And now if you don't have that guy in the lead and you got a bunch of, suits running the place, right? What's going to happen to this company now? Is it going to continue to be the powerhouse it was? Is it going to continue to innovate and move forward? Or is it just going to stagnate and just, stay where it was? Because they grew on things like offering shares on a mobile app, and allowing almost anybody in the country to essentially become an investor and just grew the company and grew like wildfire and got all those billions of dollars on, pennies. Or the Chinese equivalent of it, right? And when you can do things like that, I remember the big quote from Jack Ma years back was, if I want to add another 10,000 customers, I just add another server to Alibaba. I just put another server in the data center, right? That was real vision, right? That's not like I have to open another retail store. He was the anti-brick and mortar, right? He was the Alibaba, and, I just have to think that when you get somebody that's that much of a visionary and can create stuff like that, why would you want to hurt him rather than help him.
Well, so a lot of this really comes down to me. I mean, at least my perspective, and from what I've read, it really comes down to the fact that he has said things against the government. I mean, obviously, the dude has been in hiding since 2021, and he has only been recently spotted, like this week, in Bangkok.
Yeah, like in London. I think he was in London or something. Bangkok,
Bangkok,
that's right.
Thailand.
Bangkok.
Yeah. So you have these things. So what I'm seeing from this and reading some other sources, is that they failed the IPO because the government would let them. And the government wouldn't let them because of the things that Jack Ma said. So in order for the other investors to get the value out of it that they want, they have to show the government that Jack Ma is no longer controlling. So then the government will allow them to go public, and now they can have their IPO worth billions of dollars. And I think that's really.
But then that's going to be the end of it. After that, it's just going to slide into nothingness because there's no innovation anymore. And if you're not innovating at least every 2 years, it's over.
But the investors are able to pull their cash out. This is all about the investors pulling their cash out and letting everybody else suffer because they want their returns.
Yeah,
and they want the returns now.
And they have
Jack
every
was
right to
barrier.
it. I don't want to deny any investor his return on his investment, right? And I hear a lot of people talk about there's always somebody pontificating in the channels about, oh, this company shouldn't do this or this company shouldn't do that, and that was a bad judgment call and this and that. The companies are loyal to one person, that investor, and they've got to return to that investor, and they have to make decisions sometimes that aren't popular in order to satisfy investors. And people just don't get that. They think companies are like people, and they're not. They're run by people, but companies, are essentially in business to make investors money, and that's all they are there for, right? You can attach all the human traits you want to a company, end all to be all. It's about making money.
Well, and that comes back to our sponsor yet again is, those people have their expectations. So if you're in need of managing your employee legal items, please look at CoreX. And hey, Bruce, guess what, man? We have come to the end of the episode for this week. One of the things that, as I've been diving into some of the CoreX stuff and really looking at it, one thing that came to my mind that I really liked, was just kind of like they talk about customers they love to serve. A lot of companies talk about the things that they do. They talk about the way that they help, but how do you really know whether or not they're going to work with you? And this is one of the things that CoreX does a really good job with is talking about who they want to work with so you can determine whether or not you're the right fit for them.
Exactly. As far as when I talk about companies, it's really about the people behind the company, right? And what they're doing. And my first meeting with Brent was years and years ago when they were doing Gazelle Labs. There was a startup a pitch competition that and they built a small cagery here. Brent was behind that from the beginning, right? And this was 10 years ago here in Tampa Bay, right? And because he came out of San Francisco and he saw what went on in San Francisco and he saw Tampa Bay on the rise, he came in here and said, how can I help? How can I boost the area up? How can I, serve the area? And how can I help these people? Right. And he's now the head of his own firm. He was previously a partner at another firm, and now he's headed up his own firm. And CoreX is his vision now. And he's all about helping the startup and helping those just getting started. He actually was the one that responsible for me starting to do bullet point bulletins. He told me I had a gift and I needed to share it with the world. And sure enough, here we are.
Well, Bruce, I am super happy that he did that because I really enjoyed these conversations.
So if you can, if he believes in people, right, that, it's sometimes people just need a a little, I'm here, you can stand on me a little bit, right? I'm going to provide you that platform. Boost. I'm going to reassure you. I'm going to give you a good word, right? I'm going to help you, Yep. But sometimes that's all it is, I believe in you.
Yeah, no, that's fantastic. Well, Bruce, I'm going to say my piece. Folks, if you liked what you heard here, be sure to follow Bullet Point Bulletins on the socials under Bullet Point Bulletins everywhere. Also, for myself and Fintech Confidential, go ahead and follow us as well. Like, subscribe, share, follow, comment, whatever you do, just make sure to watch both Bullet Point Bulletins and Fintech Confidential. We've got lots of great content coming up. Bruce, we're working on some longer form stuff that dives into some details that will be coming out, which, we'll get into crypto blockchain 101 type stuff and really kind of help you understand that piece of it. I think it'd probably be a good idea. We should probably talk to Brent about this, bringing him on and talking about some of like the legal pieces to think about when you're starting to build out these technologies. So that might be something we look at as well. But dude, I'm super honored to be here. I'll let you wrap it up for today. I'm done. I've done enough talking already.
It's funny that you mentioned that about Brent. He's been sharing some posts on some of the social networks lately with some good guidance and overview stuff. If you can follow him on the social network, I know CoreX Legal's on Insta and Twitter and Facebook. Brent himself, I'm sure he's on many of the social networks. He's very outgoing. As far as like my message to people that happen to be listening to this is we're just starting out, but I think I personally have moved past my just getting started phase, and with this new year, we're going professional. I was just watching the Steve Jobs movie and watching how he grew Apple, right? And he, started out with a wooden box with some, handmade circuits and that kind of stuff. And my days of the handmade box with the circuits in there, we're moving up to we're going to be doing blown plastic, right? We're going to have an aluminum housing, right? We're working towards, so we're upping the game. Look for a lot of stuff coming out in 2023. I'm really excited about the future of what we're doing here. We're beyond the fledgling state, and we're now coming up on plane. So if you want to be a part of it, please feel free to join in and, look into our sponsors and see if there's something that they can help you with. CoreX Legal is a great company, and I can't say enough good about the people behind the company. It's not just another legal firm. You know what I mean?
Yeah, well, Bruce, one of the things you brought up that I completely forgot about because I've just been having so much fun is that we are still looking at sponsors for additional content that we are producing. So if you want to sponsor Fintech Confidential, if you want to sponsor Bullet Point Bulletins, we have packages for both. Just reach out, let us know that you're interested, and we'll get you guys set up right away. We do.
Yes, we can't do it without you. We need your support. We need your help. And thanks everyone for tuning in. I don't want to carry on forever, but thanks everyone for tuning in, and thank you, Ted, for joining me as always. And have a great day. I'm very happy with today's session here.
No, me too. Well, thanks everybody, and we will see you next week.